Good morning. Good morning, ladies and gentlemen, and thank you for attending our presentation this morning. I will do, as I've done in the past few years, a number of years I should say, the easy part, and Mustaq and Laurie will do the difficult part. All the difficult questions obviously go to them, and we've got that arrangement. So, and that's only for the people who are here for the first time. But we present our results for 2014 to you, and we thank you for the time that you have taken out to be with us. Brimstone, as we've always said, since our start, we want to be profitable, empowering, and have a positive social impact. Our track record of creating value for our shareholders is evidenced by our steady growth in our share price, in our dividends, and also in our solid growth in our intrinsic net asset value. We have strong empowerment credentials, well over the 50% and just under 60%. We also have 26 broad-based NGOs, non-governmental organizations, who are shareholders, and they themselves have more than 3 million beneficiaries across South Africa. We think it's important. It's always been part of our philosophy. It's been part of the whole business case, in fact, for Brimstone, to be profitable, to be empowering, and have a positive social impact. Profitability we've shown over the last 20 years, and building our NAV in the way that we have. But we've always believed in also increasing the circle of benefit, broadening the circle of benefit to all South Africans. We were founded on the Cape Flats, and now has a shareholder base, as he says, that spreads across South Africa and beyond its borders. A shareholder base that reflects society at large. It reflects society because we've always wanted to build a new South African company. A company where your and my children in the future can be part shareholders and participate in meetings such as this. We have built this company for the long term. We've introduced community shareholders, ordinary people. We've introduced them who would never have known anything about the JSE. We've introduced them into the mainstream economy. And this is evidenced by our shareholder AGM that we have once a year, where more than 300 people pitch. I don't know if they're interested in the company and remain interested, or if it's just for the good food that we actually give at the end of the meeting. And for that I have to thank Mustaq, because he always insists on people's got to eat well. We have created real value for our shareholders over a period. And an interesting thing that was done by Mo Breyer is that a shareholder who invested 6,250 with us. And why was it 6,250? The original shareholders, they put in 1,250 as a share, and every month Nisaria, because he was our first employee, used to go around with a receipt book, and he used to go and collect the other 1,250 for the next 4 months. He collected that, and so we came up to 6,250. Those monthly collections were termed as debentures, and when they were fully paid, we converted the debentures into shares. So that's how it came up to 6,250. It worked out to R1.25 per share. If the shareholders, that shareholder hung on to that share, reinvested all the dividends that we've given it into Brimstone shares, and you will remember, those who've been with us long enough, we also gave back R1.50 as a capital repayment very early after we've listed. If that was reinvested all the dividends was reinvested. If the life healthcare, if they've got that share which was unbundled and they reinvested their dividends there as well, that 6,250, the 5,000 shares would now be worth 1.443 million. It would be R1,443,619. We think that's actually quite a phenomenal value that we've created for our shareholders as we mark our 20th year of the existence of Brimstone. We maintain a very close relationship with all our stakeholders, whether it's our shareholders, our bankers, our community, our employees, our regulators. We maintain a very, very close relationship with them. The sectors that we have found that we've built in was financial services, food, healthcare, infrastructure, which I alluded to last year. We didn't have infrastructure in there. I alluded to infrastructure. You will notice that we had invested in Grindrod, and more will be said about it later. So that's our infrastructure play, and hopefully we'll broaden out on that. And then we've brought in another area called restricted BE structures. Restricted BE structures. And why did we have to highlight that area? Because you will see later that our investment in Pumanati and MTN Sekele has now comprises something like 7% of our intrinsic net asset value. It is an important area because those are shares that, and why we call it restricted B shares, it's shares that a number of South Africans can't get to, other than through a black investment, a broad-based black economic empowerment investment company. We think it's important that we highlight that, because you are getting some shares for all our shareholders at a deep discount, and you actually can't just lay your hands on that in the market generally. We have a diversified portfolio of 17 investments, and you will notice over the past years, some of our investments go up and the others give us a bloody nose at times, and then the others perform, and we will also unpack that as we go along. We have long-term partnership approach to our investments. And here, one that sticks out obviously, if we think about Oceana, the Oceana Group was our first investment. We invested 7 million rand in there 20 years ago. It is now worth 2 billion rand. Our investment in Oceana is now 2 billion rand. From 7 million rand, that is not the growth. We've invested as we went along. What I want to highlight to you there is our long-term partnership approach to our investments. We have a strong, diverse and experienced team. We play a leadership role and structuring role in larger B transactions. And that we've demonstrated to you in our Seavis deal, where we lead with Kagiso Trust, who itself is a very broad-based investment holding company. You've seen it more recently in Grindrod, where we led the consortium, and there was Kalula and Saletu involved, but we lead the transaction. In Life Healthcare, Mavella was involved, but we led and managed that transaction actively. In the Old Mutual deal, Whipple had a consortium that they led, and Brimstone, Mta consortium that was led, and so we did in Nedbank as well. We play an active role. It's important we not be a BE company that does a deal and then retires to the golf course waiting for dividends to be paid. We have a team that actively roll up our shoulders, look at deals, unpack deals, and actively interact with management. More recently, Mo and Felix here of Siavas were out in Australia looking at something. So our team is right there with our people. We have access to leverage transactions. Again, it's a kind of deal that is in the food sector, Oceana Group, Siavas, Tiger Brands, Taste, Healthcare, Life Healthcare, and Scientific. More will be told about, said about Scientific later. Nedbank, and more will be said about both our investments in Nedbank and Old Mutual, which is coming to. Nedbank is about to finish the term that we've been there, and Old Mutual will be at that term comes to an end in May. Lion of Africa, much more will be said about Lion of Africa, obviously, as you could have seen some of the results. It's putrid, but we are doing something about it. And it's important that I stand there. There was a very good article written yesterday by the editor of the Business Day, Pakamisa, and last week on TV, Moletsi Mabeki also said something about black economic empowerment. The question is, and will always be, has it failed or hasn't it, what's it doing to the economy? And Moletsi Mabeki made the point of black business people mustn't become administrative BE players. They shouldn't become administrative BE players, meaning they take a small stake here, take a small stake there, and then go off to the golf course and go to Louis Vuitton and those kind of places and to very fancy motor places. They say that BE companies shouldn't be doing that. They should actively be building businesses. And I think that is right. Pakamisa did the same thing yesterday and wrote in his article in the Business Day that a number of black companies are criticized because we're not building businesses. I think that we have demonstrated that in House of Fanatic we can buy a business, turn it around and save the jobs. I think in Siavas we've played an active role there, and I think Felix, who is the new CEO, is here and he can tell you a lot more about it. In Lion, we started as a greenfields business, and we've had our problems. It's been going for 14 years. But we will correct that. Iqbal is here and he will give us some more information if you so wish. Adam Sami, the CEO, is taking early retirement, and we will rebuild the Lion, and we are taking a strategic and operational review of the whole company. But if black businesses don't build business, a number of our white colleagues who are here, who've always had the opportunity to build businesses, will also talk about some failures, will also talk about some trying times, but they've picked themselves up. They've picked themselves up, and that's what black business should also do. It's not how many times we've fallen, it's how many times we pick ourselves up after we have fallen. And it's an important point. And Lion is at the time where we have got a bloody nose, but we will fix that. Aon, reinsurance brokers, operates across the sub-Saharan continent, throughout Africa, not in the Maghreb countries, or where the Sahara Desert is. Is it Sahara Desert, eh? Afina Capital also had a bit of a trying year, lost some assets. We've written the asset down, and more will be said about that. But you are asset managers. There are a number of asset managers here. You know, it goes up and down at times, and then hopefully after a time, if you stay around long enough, people have more and more confidence in you and you build. It is known that one of the big asset managers here, independent asset managers, a number of years ago was almost bankrupt as well. But look, they're a phenomenal force now in the asset management area. So Afina, we admire them, group of young black people, of gentlemen and asset managers who got out a number of years, built their business, and hopefully we'll keep on giving them support as we go forward. Some of our businesses have done very well, as you will see in the numbers, and some haven't done so well. Grindrod, yes, we bought it at 25 Rand, and we've brought it in at year end at 21 Rand. Is it 22 Rand? So we got a knock of 3 Rand per share there. More will be spoken about that as well. Then House of Monatic, which you also know that we've had problems with over a long time, gave us an operating profit of 7 million Rand. Queen's Park is their most difficult relationship. We just can't get on with that management. We're not going to let them get away with what they are doing there. So we keep on knocking on their door. And then there's the South African Enterprise Development Fund, which is getting traction now. Obviously, I've spoken about the restricted BE structures, being, in this case, multi-choice Patumanati and MTN Sekele. I think that it's also important, if you look at us, if you look at the contribution to intrinsic gross asset value, it's 40% in food, 29% healthcare, 11% financial services. Our infrastructure investment is now 10%. Restricted BE structures is 7%, and we have a 3% on other. It's beginning to be more diversified portfolio. Our dividend history, we have demonstrated, started in 2003, and as you can see the history going there, it's been increasing throughout the years. In 2008 was 32 cents, and we all know what happened in 2008, 2009. We reduced our dividend to 24 cents. A number of other companies at that year did not pay dividends. Brimstone did pay a dividend, albeit a reduced dividend. In 2010, we brought it back to 32 cents. In 2011, you will see that red asterisk there. That is the year the year of the life healthcare unbundling. The year of the life healthcare unbundling. We then reduced our dividend to 15 cents and rebuilt it from there, 18 cents, 25. Last year it was 30 cents with a special dividend of 10 cents. And that special dividend of 10 cents came about because Life Healthcare had given a special dividend. And Brimstone doesn't want to be a dividend trap. If we get special dividends or extraordinary dividends in, we also want to pass quite a bit of that through to our shareholders. We want to repay debt, but we also want our shareholders to participate in that windfall. 2015, we've declared 30 cents dividend because of the hit that we've taken at Grindrod and at Lion of Africa. And we thought it's appropriate to keep the dividend the same. But as Mustak would say, it's our 20th year, and we thought a special dividend of 20 cents would be appropriate, also because the Nedbank is unwinding just about now, and we've got we're also selling down on Scientific. So we thought a special dividend of 20 cents would be appropriate, but we're keeping the annual dividend the same. Brimstone is an investment holding company that wants to grow its INAV and also be a consistent dividend payer. The financial results will be handled by Laurie Brosen. I don't know where's Robbie. He would have done a Nando's voucher for all of you. By Laurie Brosen. That's the first time I made that kind of mistake, Laurie. And then Mustak will deal with other matters after that. Okay. Thank you, Laurie. Over to you.
Morning, everybody. Thank you for attending. I'm going to briefly give you the financial highlights of the company this year. What I'm going to do is give you more of an overview of what actually drives the value of Brimstone, and highlight some very important numbers that will be reflected in our statement of comprehensive income as well as our balance sheet. And we really just extracted the highlights of the actual financial numbers here don't add up. Obviously, in the more detailed results, you'll see the detailed income statement and comprehensive statement of financial position. So just to start off with, our total assets increased by 1.1 billion to 7.9 billion, mainly as a result of our fair value gains as well as our Grindrod investment. Our intrinsic net asset value increased by 16.1% to 4.8 billion, and our NAV, intrinsic NAV per share increased to 19.79 rand. Fred actually said we should have made it 20 rand this year, 20 for our 20th anniversary. But as you know, Gerard Kotze, who does the numbers, refused to give us another 21 cents here, and the number was the number. An important number which I'll refer to later is our dividend income, which has increased to 253 million. That's an increase of 63%. Our operating profit increased to 102 million, but that's mainly as a result of our dividend income, and an unbelievable result. I must say the two guys from Sea Harvest are here, and we're very proud of you. You had an outstanding year, and thank you for delivering. We had, as the Queen would say, annus horribilis in Line of Africa, which we'll talk about later. But at the end of the day, I think the company performed very satisfactorily. I'm talking Brimstone overall, in spite of our performance at Line. Our dividend, obviously, we remained constant at 30 cents. We thought that would be appropriate, notwithstanding the fact that we've now given the shareholders a 20-cent special dividend, coming as a result of the unwinding of the two structures, both Nedbank and Old Mutual, which we're busy dealing with at the moment. There's nothing. I think Mustak's alluded to the fact that we will be getting, I think it's in the order of about 500 million coming in from Nedbank very shortly. We've had a share price growth this year of 21.4% on our odds and 17.9% on our ends. So, that's been a very, very credible performance as far as share price is concerned. Our share price discount to net asset value ended on the year at 14.1%. I don't have the actual numbers here, but that discount has been narrowing over the last 3 or 4 years, so it's quite encouraging to see that. And hopefully that will continue. Just coming to our statement of comprehensive income, and I'm just going to highlight the major numbers here. Our sales income really remained flat. As I said, we had about a 10% increase in Sea Harvest, but Lion was down, and those are the two major consolidated subsidiaries, obviously House of Monatic as well. But basically, the poor performance in Lion did reflect on our turnover. What is important is that our dividend income, which is a big driver of ours, increased by nearly 100 million. One must just be mindful of the fact that included in that number is a 53 million, is it 53 or 52 million rand? 52, Mustak? 52. It's 52.5 million rand special dividend that we received from Line of Africa. But notwithstanding that number, we still got an additional 50 million rand extra, 45 million rand worth of dividends from our other subsidiaries, mainly, Oceana and the balance of Life Healthcare. Coming down to the next line, talking about I've spoken about operating profit, our fair value gains. I think we must look at fair value gains and equity accounted and share of profits of associates in the same light. The reason the share of associated profits are negative is this accounting. I'm going to use the word aberration, Lester. Sorry to talk like this, but we've had to take our fair value loss in Grindrod is actually reflected as an equity accounted loss. It's an accounting convention that because we control the special purpose vehicle in the Grindrod structure, we've actually equity account the mark to market number. So there was a 95 million rand markdown in that subsidiary, obviously we included interest costs as well. So we took that fair value loss actually as a share of associated profits. So when you move to the next line up, 464, actually that excludes the markdown on Grindrod. It's a little bit complex, but at the end of the day, that's how we have to report it. Our finance costs are up to 188 million. We included in that number is a 10.4 million rand loss on an interest rate swap we took. I think it was at Sea Harvest. Was it at Sea Harvest, Mo? Was it at the centre? Okay, sorry, I should have known that. But we took a 10.4 million rand knock on an interest rate swap at the centre in Brimstone at the end of the year. We also financed Sea Harvest very, very efficiently. And I must really at this point thank Mohammed, Gerard, Sebastian, TJ, our young team at in the back office, who really have done an unbelievable job in doing all the hard work in restructuring, particularly the Brimstone balance sheet as well as the Sea Harvest one. As I said, we've had an exceptional year at Sea Harvest. We restructured the debt very efficiently, and we can see the benefits this year coming through immeasurably. The next line that we must look at is our taxation line, which is important to note. The tax line, we had a 52 million write back because of an over provision for tax in the Nedbank and Old Mutual structure. I think it was in Old Mutual, but we've over provided for tax there, so there's a tax credit coming of 52 million. We also wrote back a deferred tax asset in the line of Africa, which would subsequently accrued, and that's resulted in a tax line of about 29 million. It doesn't quite stack up in terms of the percentage of tax. It's not strictly comparable to the previous year. Gives us a profit for the year of 278 million with a basic HEPS of 105.8 cents, diluted EPS at 90.4, a basic EPS, I said, and a basic HEPS of 116.9 and a diluted HEPS of 99.8 cents. If I then move on to the fair value gain line, just to give you the highlights there, we had a phenomenal year with Tiger Brands. I think the share price went up over 100 rand. I mean, that translates into 161 million rand fair value gain. And I mean, that just gives you the idea of what can happen when you structure the debt efficiently in a company like Brimstone. I mean, I think we've put down almost like 12 million rand. Yeah, we put down, I mean, we've got 40 times leverage there, and we've got a fair value gain just this year, 161 million. It's a significant number. I mean, Nedbank this year was 151 million. Our net value there today, after putting in I think we also put in 12 million. Was it 10 or 12? 10 million. Okay, 10 million. I mean, we basically got value there of 500 million 10 years later. Patumanati, which I must also give Sebastian and the young team behind us in the back office credit, we've made a gain there of 81.5 million. I mean, that wasn't a number on our balance sheet 2 or 3 years ago. Old Mutual also performed, Life Healthcare at 47 million was slightly flat this year. I mean, it's been our banker for the last 7 or 8 years, and it came in at 47 million, but one must bear in mind that we received 150 million rand worth of dividends. Old Mutual, I've said, the investments in Line of Africa also need an explanation. That's not Line of Africa, the asset. These are assets in the Line of Africa asset portfolio. And as a result of it being a 100% owned subsidiary, we have to account for those fair value gains in Brimstone. So Line of Africa's asset portfolio grew by 12.6 million rand. We obviously have Rex and African Overseas. Taste was down slightly at 10.9%. Our MTN Zakele, which is one of the BE structures, last year was not traded I'm talking last year being 2013, was not traded on a trading platform. This year, they put it onto a trading platform, and the see-through value versus the option value resulted in a markdown of 12 million rand. The year before that, we valued it as an option, and this year we actually got direct line of sight into the MTN share. I think it was at 105 rand, was the number. And Galaxy Gold, which we've actually written off, our foray into gold mining has come to an end. Okay. Looking at our statement of financial position, just the highlights, as I said, that our borrowings have gone up significantly. Obviously, we've increased our borrowings at the centre due to the acquisition of Grindrod. We've refinanced Sea Harvest, and the balance is really all our SPV structures that will be more fully disclosed in our annual financial statements. And anybody wanting to ask me any questions, and Mustak will show you in the INAV number exactly where the debt is situated. It translates into a book net asset value of 3.3 billion. The book NAV in cents is 13.56 rand. Our intrinsic NAV is 4.8 billion, and our intrinsic net asset value per share is 19.79 rand. Just giving you a quick bar chart overview of our intrinsic NAV. You can see that we must really look at it coming off the 2010 unbundling of Life Healthcare, where we had an INAV of just on 1.9 billion, which has now grown to 4.862 billion, which is very credible. I mean, it's the important thing to see in Brimstone today, and the big drivers, as I alluded to earlier, is the fact that we've used our debt very, very efficiently to grow our asset base. And I think that has augured well for the future. I don't think there's anything else. I think that basically concludes my discussion and my presentation. If there are any questions, we can speak about them afterwards. Thank you very much.
Thank you, Laurie, and good morning to everybody. Starting off on the food sector, the underlying investments. The first one is Oceana Group Limited. We own an effective 16.81% of this company, and it accounts for 26% of Brimstone's intrinsic gross asset value. During the year, the company had lower horse mackerel catch rates, but positive impact of weaker exchange rates on the export sales helped a lot. The closing price was 104.86 rand per share compared to 82 rand the previous year. And during the year as well, we received and accrued 76 million rand in dividends, and we recorded 29 million rand in equity accounted earnings from that company. And the current year's earnings at the equity accounted earnings line, it's for a full 12 months. Remember last year we only had 9 months because we couldn't disclose, but it's really a rolling 12 months we got in there at the moment. During the year as well, Oceana made a distribution of 298 million rand to its staff beneficiaries of the staff share trust, and this meant that Brimstone had to debit its retained income of 59 million rand, being its portion of the cost of that. Just to show you that 2,647 beneficiaries of this trust benefit to the tune of more than 100,000 rand each pre-tax. There was quite a big payout that went out there was a cost to the staff, of course. The staff trust was expiring in 2016. We then negotiated. Most of the quotas are to be reissued in 2020. We then negotiated with staff to push that date from 2016 to 2021, and for that we gave them about 25% of the value which had accrued to them. We gave that to them early. So that's really what's part of the whole transaction. It was very positively received, and thankfully we've now noticed as well that after we did some homework, after the money was spent, most of the staff, 44% of them took it and reduced debt. They didn't go out and spend the money. Others spent it on education, fixed up houses, bought cars, but it was very, very well spent. And it turned out very, very positively. Moving on to Sea Harvest, we owned 58.44%. Catch rates were 18% higher than the prior period. There's been strong local and international sales driven by firm demand for hake. Sea Harvest also benefited from the weaker exchange rand, and revenue was up by 10%. And importantly, the EBITDA increased from 147 million the previous year to 198 million for the 2014 year. As mentioned earlier by Laurie, the long-term debt was refinanced in 2014, which has led to a significant saving in the finance charges. We received 59 million rand in preference share dividends and redemptions during the year. Operating profit before interest and exceptional items increased by 58% to 109 million rand during the year under review. Last year as well, they bought another big vessel called Harvest Atlantic Peace for 130 million rand. It's really a floating factory which they bought. Tiger Brands, we've got 0.94% of this company. We've got the rights to... Thanks, Laurie. We've got the right here to 1.8 million shares, which we acquired at 140 rand and 67 cents per share. It matures in December 2017, and we revalued upwards by 161 million rand during the year under review. We also received 2.1 million rand dividends from Tiger during the year under review. Moving on to Taste Holdings, we got effective 14.21%. During the year, we acquired an additional 13.2 million shares at 3 rand per share. When Taste was busy doing the rights offer, they utilized that money to buy Domino, the franchise, the master franchise for Domino's Pizza, and they also acquired Arthur Kaplan Jewelers. During the year, we've revalued it downwards by 11 million rand based on a closing price of 3 rand 20 cents per share, compared to the previous year of 3 rand and 75 cents a share. Brimstone also received a dividend of 1.5 million rand during the year under review. Moving on to financial services, Line of Africa Insurance Company, which we own 100%. The loss from operations for the year was 177 million rand, which is made up as follows. It had a trading loss for the year of 70.4 million rand. We had a reversal of prior year deferred tax asset, which we've got the rights to just under 17 million shares, which we acquired in 2005 at 13 rand and 8 cents per share. During the year under review, we revalued upwards by 28 million rand to 205 million rand, based on a closing price of 34 rand and 70 cents per share, compared to the previous year of 32 rand and 79 cents per share. This deal matures on the 1st of May and has thus been reclassified as a current asset. Nedbank Group, we got just under 0.5%. We got the rights to 4.18 million shares. Our initial investment over there was 2.6 million shares acquired at 74 rand and 75 cents per share in 2005. During the year, we revalued upwards by 151 million rand to 577 million rand, based on a closing price of 249 rand per share at the end of December, compared to the previous year 210 rand. This deal has matured on the 1st of January and is thus reclassified as a current asset as well. Moving on to Aeon Re Africa, we got an effective 18% of this company. It's a leading reinsurance broker in South Africa and Sub-Saharan Africa. During the year, we received dividends of 7.5 million rand and we had equity accounted earnings of 600,000 rand. Moving on to Afina Capital, where we've got an effective 28.79%. That's an investment manager offering specialist equity and balanced portfolios. During the year, we received dividends of 2.6 million rand, and we had an equity accounted loss of 800,000 rand. We've impaired this investment by 28.3 million rand down to 20.9 million rand. And the reason we've done the impairment, it's the company has lost a lot of assets which it had under management. The asset under management is now about 11 billion rand. But subsequent to year end, they've now just attracted some additional funds, and they've just recently received another 1 billion rand investment mandate. Moving on to healthcare. Life Healthcare, we've owned just over 5%. Total dividends received for the period was 127 million rand, which included the 52 million rand special dividend, which was mentioned earlier. That's based on a closing price of 42 rand and 76 cents compared to the previous year of 41 rand and 86 cents. We revalued upwards by 47 million rand. Currently, we're very happy with the growth in South Africa of the company. Then they've also recently increased their stake in Max Healthcare in India. They've also now recently gone into Poland. They've done 2 transactions in Poland as well. Scientific Group, we got a 28.2% effective shareholding of in that company. We've had equity accounted earnings of 2.9 million rand during the year. And we also received 1.3 million rand in repayment of shareholders' loans. We've entered into an agreement to dispose of the diagnostic business, and we expect to receive 84 million rand for that once all the CPs have been met. And the transaction is expected to be completed in the first quarter of this year, which is by the end of March. I think the only thing outstanding left now is a Competition Commission approval in Zambia. We've already got South Africa and Namibia, but we're still waiting for Zambia before we can get our money. Moving on to infrastructure. Grindrod, got just under 5%. As Laurie mentioned earlier, it's accounted for as a JV, equity accounted, and this affected the equity accounted earnings of Brimstone share in the results. That's our entry into the infrastructure sector, which we spoke about last year. We participated in a consortium and acquired 8.4% of Grindrod. We acquired effective 59.2% of this SPV, which translates to 37.9 million Grindrod shares at 25 rand per share. The closing price was 22 rand 40, and we equity accounted a loss of 96 million rand. Now, just to give you a detail of what's in the equity accounted earnings portion, the fair value losses was 98.5 million rand in the period. We had finance costs of 17.2 million rand. We had some interest income of 1.5 million. Taxation, deferred tax, which is negative in this case of 18, which gives you the net equity accounted loss of 95.9 million rand. If I can then move on to restricted BE structures. Patuminati, we now own an effective 4.41% of the structure. Patuminati is a 20% shareholder in MultiChoice South Africa. During the year, we acquired an additional 1.1 million shares at an average price of 126 rand and 94 cents per share. And we've revalued upwards by 81.5 million to 370.9 million at year end. We also received dividends of 19.8 million rand. Also of interest to note is that within the Patuminati structure itself, their pref share funding has now been fully repaid, and the cash flows coming out of this investment should in actual fact improve going forward. MTN Zakhele, we got 2.68% of this company. MTN Zakhele in turn owns 4% of MTN Group Limited. During the year, we acquired an additional 1.16 million shares at an average cost of 99 rand and 10 cents per share. We've revalued this downwards by 12 million rand at year end to 235 million rand. And as Laurie mentioned earlier, that's based on a closing price of 108 rand and 50 cents per share. In the previous year, we valued this as an option because there was no market. And when the market was in actual fact created, we had to take a write down, which we've done in the year. And that's why we got a negative 12 million rand for the year. Moving on to the other investments, House of Fanatic, we own 100%. During the year, turnover increased marginally to 184 million rand with an operating profit of 7.2 million rand. We're expanding its share in the corporate wear market and also increasing the C2 retail footprint. You might have noticed there are 3 C-squared stores, one in Canal Walk, one in Gateway, and recently we've also opened in Rosebank. In April or May this year, we're also opening in Menlyn Park. Rexreform and African Overseas, we've got an effective 22%. We acquired 33% in 2007 for 47.3 million rand. During the year, we transferred 25 million worth of shares to the Line of Africa as part of the capital introduction, and we've revalued this asset upward by 4.8 million rand during the year under review. Moving on to our intrinsic NAV summary. The book NAV went up by 2.6%. From 3.2 billion to 3.325 billion. The intrinsic NAV went up 16.1% from 4.1 billion to 4.8 billion. And the book NAV went up 2.3% as well to 13 rand and 56 cents a share. The intrinsic NAV per share went up by 15.8% to 19 rand and 79 cents from the previous year of 17 rand and 9 cents. And the discount to NAV, to intrinsic NAV on the ordinary shares, it's 14.1% at year end, and the N ordinary shares at 16.6%. And then moving on to the intrinsic NAV detail, it's probably the most important slide. I'll go through the valuation methodologies which we've used line by line. Life Healthcare and Oceana and Grindrod, straight market to market. Sea Harvest, we've used a discounted cash flow and an EV/EBITDA multiple on the basis of 50% on the DCF and 50% on the EV/EBITDA multiple. And we've used a 6 times EV/EBITDA multiple for that 50% calculation which we've done. Nedbank option, it's just a market to market. But Tubanati is the same as well as MTN Zakhele. Tiger Brands and Old Mutual is option valuations which are done by experts who do the valuation for us. Taste Holding is market value, it's straight market to market. The Scientific Group, what we've done there, you can see we've got a value of 83.6 million rand. We've taken the anticipated date of the money coming in, because part of the money will come in this year, part will come in next year, and we've done a present value backwards to get us back to the 83.6 billion rand. Okay. ANO and Rexreform is market value of the shares. Aeon Africa. What we've done there is we've done a bit of a hybrid. It's 8 times the PE adjusted for net cash surplus. So we've used 8 PE, but we've also adjusted. There's some excess capital in the company, so we've taken our portion of the excess capital as part of the valuation as well. The investment properties, which is really the House of Monatic, the 2 buildings there and the one in between which we bought, where we've got an outside tenant. We've used 9% cap rate to get to that valuation. Afina Capital, we've used 1% of assets under management and a 9 times PE, with 25% weighting for the assets under management and a 75% weighting for the PE. House of Monatic is just rated book value at 39 million rand. Line of Africa is also at book value at 19.9, call it 20 million rand. Other investments, it's at book value at 5.5 million. And we've got another BE option, that's really the Santam one which we've got, which is based on the market value of 6.5 million. That will also be unwound in this current financial year. It's coming to the end of its tenure as well. So that gives us a summary then of assets of 8.1 billion. We've got debt of 2.3 billion against that. We've got accrued CGT of 926 million rand against that, which gives you a intrinsic net asset value of 4.8 billion rand. I can then move on. In conclusion, as you can see, we've got a strong balance sheet and access to facilities. We defined by our ability to enhance NAV. We've got a solid track record of unlocking value, and we are taking decisive action at underperforming investments. We will continue to seek opportunity that will create long-term value for our shareholders. And as you've seen from some of the investment which we've had for up to almost 20 years now, we've got a very long-term view on the underlying investments. Thank you very, very much. We're now happy to take questions.
Thanks, Mustak. Thank you, Mustak. I think it's important to note that if you'll take us back to the last screen, Nisar. I think both Mustak and Laurie alluded to, and I want to take you back to the second point. defined by our ability to enhance NAV. We've spoken about the Pumanati, we've spoken about the MTN Sekele, but if you look at Tiger Brands, 10, 12 million went in. We get what is called a trickle dividend on that. So we get a dividend on our investment. But we've turned it into, if you take us back then, take us back to the NAV, and you look at I know it's small, Tiger Brands options is 280 million. Now that was also is a phenomenal return. If you look at Nedbank and Old Mutual, same story. Nedbank we put in how much? 10 million. The 10 million that we've put in, and by working actively with Nedbank, we is to get, annually we would get a fee in excess of about 20 million. And so with Old Mutual, and then we would just buy more shares with it. So when you look at Brimstone, you've actually got to look at it in its totality. That we've used the advantage of black economic empowerment. We've leveraged our positions significantly to enhance our return. And we have paid dividends regularly, as demonstrated over the past 13 years, as well as we have gone out to build businesses, create employment, save jobs, and we have also brought in 26 NGOs into the environment. So we've tried to capture and we've tried to cover all bases of South African society in the way we have built our business. Thank you all for being here, and thanks for taking the time out to be with us. We really appreciate it. Thank you.